In this video, I'm going to show you exactly what I send to the members when I do a chart reading session. In this video, you're going to see a members only video for which we talk about 3 ETFs and Bitcoin. We're talking about where they're trading, where we would enter trades, and how we trade them and knock down all that covered call premium so we can buy dividend paying stocks. Now, in the description below, I have a 1 free month membership. Here's the phone app for which you can watch my entire library of what seems to be hundreds of exclusive videos for members. And oh, by the way, there is a video library that breaks down all aspects of selling premium. Little 5 and 6 minute videos where we talk about things that are 100% selling premium, writing covered calls and selling cash secured puts to generate that fat money to buy dividend paying stocks. This is the phone app, and the members get access to all my trades. This is what it would look like if you were a member. On the phone app, you actually see all of my trades. Then you go to the post for a deeper look into why I did this trade. They get all of my trades when I open them and when I close them. I also trade my kids' accounts. So you're getting all of my trades in and out. If you wanted to follow one of them and actually do it like many members do, you also get to see my kids' trades. Those are smaller account trades. And again, if you wanted to take on that trade and follow it, it's all right here. You see exactly why I'm in the trade, and you can follow the trade because all of the trades have a unique identifier so you can track it from beginning to end. And you get to watch all these exclusive videos that I do for the members. You're going to get to see one right now where we talk about chart reading, and I do this about every week. Absolutely love talking charts. Hey, look, I'm going to turn it over to him. In the description below is your 1 free month offer, cptdashboard.com. Sign up. I would love to welcome you aboard. Now, let's turn the show over to him. So stick around. I know you're going to like this one. Hey, welcome back, everyone. Let's take a look at 3 stocks that I'm looking at. So we're going to start with TNA, and I want to show you something here with TNA right now because TNA is starting to trade in this nice little range. We're going to turn off all these indicators, and you could see it's trading at the bottom of its range. We can go all the way back to what looks to be mid-December, where when it was trading at the bottom of its range in and around $40, we have really good support there. This moment here, when the stocks tank, that's basically going to be coming in to 2025. And quite frankly, they were just selling off stocks, and we get some interest rate news. So it bounces there at 37, 38. And it rallies back within its range. I believe its range is anywhere between 46 and 40. Now, right now, I got involved with a TNA in the money covered call, where when it was trading in and around 45.85, we went ahead and bought the shares, and then I sold the 43.50 to give me some nice downside protection. And look what has happened. That downside protection is working for me right now because sure enough, the stock is trading under 34.50. Now remember, I bought the shares at 45.85. They paid me the intrinsic value from 45.85 to 43.50. Now, I didn't make any money on that, but I have that in my account. So my new cost basis is 43.50. And now with the stock trading under 43.50, I have to wait until expiration, and the current option, which is trading for 55 cents, I need that to dwindle down to about a nickel, which would mean TNA would have to trade in and around 43.45 for that to happen. So basically, I'm not going to touch this until TNA gets up to 43.45, and then I would consider buying it back. 43.50 being my cost basis, we're going to go ahead and write a nice little covered call out of the money or at the money. Remember, when we do the in the money covered call and I buy the shares at 45.85 and I sell the 43.50, that's an in the money. They pay me the intrinsic value, so my cost basis is 43.50. This is exactly why we do this with stocks that are trading high in the range, because we know they're going to peel back. So we want the downside protection. And luckily with TNA, it's a 3x leverage ETF. We get a decent premium. We picked up almost $1 of premium on this trade. See, if you're trading the Russell 2000, for which TNA is a leveraged ETF to the Russell, you'd only get maybe 33 cents for that trade. In this case, I get $1. And if it were to fall below 43.50 to the point where it's trading all the way down to 40, well, I can write a 43.50 30-day trade, making about 5%. Now, I don't like doing that because I like doing the 1 week, 2 week trades, but if I have to, I will. Remember, the 30-day trade is always out there. Just have to be patient, and you have to be willing to take what the market gives you. See, I take what the market gives me. A lot of people ask me, boy, you wrote a covered call on MSTX or NVDX or this, that, or the other. You should have waited a day. No, I take what the market gives me, because although today maybe that stock is up and I might be kicking myself that I could have made more, what happens if it's down? You take what the market gives you, because when that trade's over, there's some 8,000 trades you could be doing for your next great cover call trade. That's how I see it. That's why I always have my money working, and all my trades are typically, for the most part, spinning. Now, I got a couple that are sitting on the sideline right now. In fact, I woke up this morning saying, look, define yourself, John. What are you? You're a selling premium trader. Get those stocks in the game. Let's start making some premium. And if we have to dance with stocks that are up here and we're down here and we're writing covered calls, well, we need to use the expected stock move calculator for the expiration, and then just pick the high end. And as the stock makes the move, one way or the other, because remember, this expected stock move calculator, which you can find on the download hub, it's there. Grab it, use it. It's going to tell you the expected move for the at the money IV for the time frame. So it can move lower or higher. Of course, we're writing covered calls, so they're going to be out of the money covered calls, because where my cost basis might be is much lower than where the stock is. What we don't want is our strike price to be challenged. What we would hope is that over the 30 days or the time frame, the stock slowly moves up to our strike, and then we can manage the trade. What a lot of people will do, pick that close to the money strike, and the stock rockets higher, and now it's hard to manage because the stock is $4 and $5 above your strike. If you buy it back, you're adding all that cost basis to the trade. And look what happens when stocks rally to their resistance. They usually pull back. And in the case of TNA, that would be some $4 and $5 and $6, which means you got to wait. And you added $5. And so now you're feeling the emotional drag of this trade. So, expected stock move calculator, use the top of the range. Now, that's TNA, and I do want to show you something real quick. Let's look at the Bollinger Bands. You know, the Bollinger Bands are different than the Keltner channel. I believe you could go to YouTube and watch some videos, but it basically predicts a 2-strike deviation out of the money move for the particular stock we're talking. But what I'll tell you is this, I don't look at that because, to be honest with you, I really can't read that correctly. The Bollinger Bands have compression. This is what I want you to notice here. And we're going to look at the chart here. Bollinger Bands have compression. And what's happening is a stock is consolidating. And when you see those bands starting to tighten up right here, you can see how it's tightening up. It's like winding up a rubber band airplane. It's going to move up or down in a big move. Now, in the case of TNA, you could see that move could be from 45 down to 35. It's going to snap. You can see the consolidation here, and look what happens when the consolidation is over. Bang, pops to the upside. This thing, when it pops from 42 to 56. Now, of course, we got some news there. That was interest rate related, because when that happened, the Fed said they were going to cut a lot of rates. Well, fast forward, that news has waned and they're changing their stance. So the stock has fallen back to a range we can trade. Do you see that range right there? That is incredible. That goes all the way back to September. This is your sandbox right here. This is your sandbox, 46 to 40. Play it, use it. Now, look at the compression that's happening. If we go back to the last time we got this compression, you could predict this thing could make a move higher and there might be some news, or the consolidation in the index just pops one way or the other. I like that consolidation right there. That's telling me this is going to make a move one way or the other. So if I'm going to be involved, I would love to do an in-the-money strike just so we get some downside protection. Right now it's trading for 42.50. Look at doing the 40.50 strike. You get that downside protection. And what does the charts tell us? Its near-term support looks to be bouncing off in and around 40. So if it peels back to 40, then you can get off a clean covered call at the 40.50 strike. Consider the in-the-money strike. I love buying the shares, giving them away lower. They give me that downside protection, plus about $1 in time value premium. Looking at SOXL, you know I have about 3,000 shares of that, and it's on the sidelines. I have basically a 31.50 strike cost basis, so I'm kind of waiting for this to give me a little bit of ups. Right now it's trading what seems to be in the bottom of its range, but look at this compression again on the Bollinger Bands. Look what happens. We get some compression, bang, to the top side, and we get a reaction from that Bollinger Band compression. Look, you can't predict it either way. If you're thinking a stock is going to make a move, those Bollinger Bands might give you a little bit of hint. Well, it fell off considerably because of the DeepSeek news. And of course, Nvidia fell from what seemed to be 140x all the way down to about 117. So of course, the SOXL falls. AMD gets kicked in the ribs. And now here we are. We're kind of pacing ourselves here. There's really not much of a range outside of once it got back to 26, 27, where it's at right now. You could see going back to mid-November, we're looking at that 26 number as its support. We've been talking about that for over a year. If you draw back this line, it's in the tank. Absolute bottom of bottom was in around 25. So we felt very comfortable trading in and around 25 anywhere with this thing. I mean, these semiconductor companies are cyclical, but they are big and massive and have profits. And when you lump Nvidia in there with it, and Nvidia won't trade much below 130 unless something like DeepSeek comes out, it's going to hold it up there. And look for SOXL to probably make another run back to the Keltner channel midline and see where it goes from there. Right now, it's trading in and around that midline right now. In fact, let's turn this off. Yeah, right at the midline. So if it breaks the midline and moves a little bit higher, again, we're looking at 31 would be a beautiful number to trade it. And if I were to trade it, hey, at 31, I'd get out of the trade and we'd move on. So for right now, I'm kind of waiting. I would love SOXL over the next 2 days to maybe find itself to in and around 28.50 or 29. Then I'll put on that 31 to 32 strike, maybe go 2-3 weeks, and we take what the market will give us. Now, I want to talk about yin. You know, Alibaba has literally retraced its entire run from when it hit above 120. And that was back here where yin rocketed to 58. A lot of people were caught in that trade, and they still are. One thing I want to highlight here is this. Will I trade anything that's trading outside of the Keltner channel top line? I will not. That is a red flag because we can look at MSTR, we can look at Nvidia, we can look at yin, we can look at anything that trades outside of its Keltner channel top or bottom, but that might actually be a good time to buy. As you can see, trading outside of the bottom was a good buying opportunity. But when it's trading outside of the top line, it's way too hot. And right now, I guarantee if I brought up the RSI on this, which 70 is overbought, and they're going to sell it off, well, I bet if I check out Alibaba, which I'm going to do right now, oh, look at that, blowing up outside of the top. And look what happens when it gets to the top. And we're already at the top. So my take is if you get involved now, boy, you have more of a chance of getting ripped than actually reward. Now, I don't have a crystal ball and neither do you. So if you take your shot, good luck. But Alibaba literally fell from 117 all the way down to 95 before it caught some wind behind its sails and it moved a bit higher. But then, of course, that news from China where they were going to stimulate waned to the point where Alibaba found itself in and around 80. Now, a lot of things have happened recently, and Alibaba's earnings is causing this massive run-up right here. So you might find that when it does peel off, maybe it peels off to 110. You can see it right here. That might be something I'm looking at, a 110 strike, if you're going to play Alibaba. And getting back to yin, because I know a lot of people want to trade yin because it's a $38 stock. I'll tell you what, if you're going to put money in the game, if I'm going to put money in the game, it's SOXL. If I'm going to put money in the game, I'm going to use TNA. Right now, yin is absolutely straight line parabolic move. Look at the last time this happens, every single time, including the 1 to 58. It's just too much, too fast. Wall Street pulls back indexes. They absolutely do. They can use them to trade them. Alibaba's going to get pulled back. This thing will too. Now, if Alibaba's earnings are real and Wall Street likes them, maybe it comes back. Yin comes back to 33. Maybe you get involved there because it's a 3x leverage ETF to the big China large cap retailers. Well, maybe you buy the shares at 33 and maybe write a 29. You could still get some great premium using that trade. Don't overreach right now because you'll get snapped off. Now, one last trade I want to highlight here is Bitcoin. So Bitcoin has found itself a bit range bound here. Now, this range bound, once it rocketed into the 90s and 100s, it's become range bound and it's pretty predictable. We can almost go back to when it would trade between 55,000 and 65,000. This is really no different. You can see back here it did that and we made all kind of money using BitX and BitO. Well, we're right there. Look at how that is working. It almost looks the same. So what you have to do is say to yourself, okay, where's the bottom of the range? Because this is where all the buyers are coming in. That's going to be 92,000. In and around 92,000 is where you might want to place your cash secure puts for BitX or BitO. If it's trading in and around 96,000, then buy the shares of BitX and then sell the in-the-money covered call, getting some downside protection while making some decent premium because BitX is a 2x leveraged ETF to Bitcoin. Of course, BitO is trading around $22.50. It pays a $1 dividend. If you bought it at $22.50 and wrote a 23 covered call for 30 days, there is a chance you might be able to collect that dividend as well as a nice 4 to 5% cover call premium. That might be a double hit trade right there. You collect that dividend for $1 and you collect the cover call premium. Bitcoin's going to go back and test highs again. You can see the resistance here. It's looking in and around 106, 105. I just believe it consolidates and then it punches higher. Remember, 75% of all Bitcoin is not traded, it's held or lost. 25% of Bitcoin is traded and only 440 coins per day are being mined. Scarcity rules the day with this commodity, Bitcoin. So what you want to do is trade the ranges. 92,000 would be its near-term support. 105, 106 is its near-term resistance. So when it's trading in that range, well, use the in-the-money strike, cash secure put strike, but just make sure you get a little bit of downside protection if you can, because I'll tell you what, BitX this morning traded as low as 50. It's up to 53 now, but that's the kind of swing you get. So give yourself a little downside protection. You can still make good money. Take what the market gives you. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.